Hello again, everyone. In this technical analysis of the stock market video, I call it top heavy because that's exactly what the S&P 500 is, and it reflects the concentration of just 5 stocks: Microsoft, Apple, Amazon, Facebook, and Google. So what's on the screen here? The S&P 500 equal weight index. This is where the S&P 500, every single stock is weighted exactly the same. And you could see it was down 7.13 on Friday and fairly flat in here in terms of the movement after reaching that peak on June 8th. So the June 8th high is still holding, and the rally since then has been fairly flat. So how does this compare to the S&P 500? Let's pull that up. You can see that here's that June 8th high on the S&P 500, but we kind of gradually came up here and took out that high on the 22nd, 23rd. Actually, the intraday high is on the 23rd of July. And then here's the price action ever since then. So instead of being down 7 on Friday, the S&P 500 was up 24.90. Those top 5 stocks account for nearly 22% of the price of the S&P 500. It's amazing. Here's what's going on with the S&P. Let's zoom in a little bit. Here's the price action. And we basically have what's like a little dragonfly doji in here for Friday. So we broke this trend line a few days ago. Actually, what was that? 6 days ago, we broke that trend line. Kind of came back and hugged it on Wednesday. Started to fall away a little bit on Thursday, and then we snapped back here on Friday. So the jury's out right now. We'll see whether weakness kicks back in first thing Monday morning, or do we take this high out here, the July 23rd high, which isn't that far away. I mean, the high is 3279.99, and we closed 3271. So it wouldn't take much to take out that high, and if it does take out the high, there's a pretty good chance we're going to push into this gap and may even try to close the gap. We'll see. Now, the bottom of that, the top of the gap would be like 33.28. Okay, so that gives you some idea. Now, when we look at the weekly chart, here's how it looked for the week, up 55.49 for the week. So we continued to have a gradual push in here week after week on the S&P 500. So let's take a look at the Elliott Wave analysis of this. So this is what I've got in here. And, of course, the first wave down, and I'm still counting this as a wave 2 counter trend rally. And here's the complex corrective wave structure that we've got for it. And again, if we take out that high, 3279 and 99, let me get rid of my crosshairs. If we take out that, thought I did, there we go. We take out that high, then we're going to push a little bit higher in here, and most likely this C wave has not ended there, and it's pushing and subdividing a little bit higher up into the price action. We'll see what happens at the beginning of the week. So what am I doing here? I've got this labeled at the July 23rd high, and what I'm looking at is here's the February high, 33.93. And here's the March low, 21.91. And so I'm looking at the retracement. And so far, as of July 23rd, we've retraced 90.6% in almost exactly 4 months. Because this was March 23rd, and this is July 23rd, 4 calendar months. And so it's really interesting. So you look at that and say, well, wow, that's a pretty deep retracement. And in reality, yes, it is. For a wave 2, I'm normally thinking 50 to 61.8%. But because we've gone this far, does this rule this out and say it's invalid? No. Okay. A wave 2 can go all the way back to the beginning of wave 1 and still be valid. The rule is you just can't go beyond the beginning of wave 1 and still be counting it as any kind of impulse wave to the move to the downside. So just for a little perspective, let's go back and take a look at the 2000 top. Let me see if I can do this without screwing it up. Let's go back over here. Okay, so here's what we're looking at. Here's the high, and this was in March. Okay, the Dow peaked in January of 2000 over here. That's where the Dow peaked, right up in here. But the S&P 500 peaked, I know it was March 24th. okay? And then we came down in a first thrust down. Then we got very choppy in the move back. And so what I found really interesting is what happened here. 89.3% retracement. So I guarantee you, back at this high and right in here, everybody and their brother thought we were continuing. The bull market was still on. We're going to take out this high. But no, it broke down and started selling off all the way into 2002. Okay, so 4.5 months is how long it took for this rally, from April 14th to September 1st. Okay, 4.5 months. So 2 weeks longer than where we are right now. And we're talking about 89.3% versus 90.6. So 1.3% difference in terms of the performance, at least so far, okay, as of July 23. So, that's my qualification. So am I trying to predict anything with this? No. What I want to show you is give some perspective that says this wave structure is still valid, okay, until and unless we take out this high right back up here on February 19th. So we'll see what happens in here. Okay, so now I had to look down my notes. Now I want to look at one of our indicators that we look at every day, and that's the percent of stocks above their 50-day moving average in the S&P 500. So look what's happening in here. So I've got zones in here between 70 and 80 is kind of my overbought zone, and then here's the 90 level where we got an extreme. And when did that happen? Back in June 8th was the peak. There's that June 8th again. March 25th was the low over here, okay? And then, we got very oversold and we got very overbought. Now, where are we? We're rolling back over again now and coming back down. Now, on Friday, we hit a low of 55.25, okay, and closed at 65%. Now, we came down over the last few weeks, over the month of July in here, late June, early July, and came down and tested that 50% level, closed below it once, but basically this came in almost as support. So we'll see whether we come down to test this and start to break back through this. But right now, 65% of the S&P 500 stocks are above their 50-day moving average. Now I want to take a look at the dollar index, because I think there's potentially some big things in the works here. So there's been a lot of PR about the dollar index, and they've been talking about the fact that it just put in its worst month in a decade, okay? Worst month in a decade, so here we are. Now, as I look at this, we're coming down, we got extremely oversold. And I know that I saw the last time, I think it was about 10 years ago, where we got, or actually it was March of 2008, where I saw that we got an RSI reading this low, okay, 12.0 on the RSI reading, definitely extremely oversold. Now, when I look at the wave count in here, this is what I think's going on. And I wasn't sure for sure that we had 5 waves. And then I started looking at how we looked as compared to primary wave 2 to primary wave 1. Because right now, the way I've got the wave count structured is I think that we are we cycle wave 1 up and cycle wave 2 pullback, and that we are actually in cycle wave 3. Ignore that, as just because of the way we got the placeholders in here. So I think we're in cycle wave 3 to the upside, and that we've had primary wave 1 and a pretty volatile primary wave 2, okay, pullback. So when I started looking at 2 as compared to 1, 61.8% retracement of this move is where our low was for this last week. Let's go back to the daily chart. So then what were we doing on Friday? Look at this candle on Friday. We gap lower, come back, and we close above the opening. So basically this is a bullish engulfing bar. And why do I call it engulfing bar? Because this body, the white body, is engulfing the entire red body of the previous day. Okay, this is very bullish looking. Now, we need follow through. We need it to move to the upside. And if we get follow through and this starts to take off, it should break out of this channel It should come up and come up into this area here, 97 or so, before we start to get some kind of resistance. We'll see. But I think this is going to affect gold. I think it could affect the stock market. We'll see what happens here. See if the dollar index I don't know why, but we'll see if it'll take off on this coming week. All right, let's take a look at the DAX. I like checking in with the DAX to see what's going on over in Europe and how the DAX is acting. And right now, Thursday, Friday, we finally got a breakdown out of this big channel. And I think this wave 2, it's interesting how the wave 2 on the DAX actually got up into that gap, that was created on February 24th. And it didn't close the gap, but it got well into the middle of it. And then we came back down and we've broken down out of this channel. So we'll see what kind of continuation we get. Down 66.29 on Friday. And look at the weekly close, down 524.7 for the week, closing below the entire range of the 3 previous weeks. So that's a pretty negative price action on a weekly chart in here for the DAX. So I would think the next key area that we're really looking at in here is taking out this 11,598. What kind of support do we get, and if that holds or not? All right, so that to me is the key. All right, that's it for this weekend. If you felt like the video was helpful, give it the thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net right here and check out the website and the membership. Everyone have a great weekend. Be safe. Talk to you on the next video.